Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Monday after the G20 meeting. And this is the 3rd of December, 2018. We're getting on to about 2:40 in the afternoon. These are close to where the settlement prices came in. Copper, a big disappointment, got up to 285.80, fell apart. In fact, it's interesting. If you studied the G20 announcement, and I certainly did, it's very nice on ideas, things are going to happen, and very poor on substance. I can't tell you if China's lifting tariffs or not. They don't say. I can't tell you, as the president did, that the auto tariffs that were 40% as they raised them on U.S. cars is going back to the common 15% they charge everybody else. I cannot tell you what the word substantive means when they say they're going to buy a lot of produce, be it industrial goods, agriculture products, blah, blah, blah. I don't know what those words mean, nor do I know when they're going to do it. So you walked away with a 90-day grace period, and I think all the experts are going to tell you 90 days. It's enough for a Santa Trump rally, as I want to call it, in the stock indices. No reason. Why not? Is it enough to go to new highs? Doubtful. Is it enough to get the metal markets awakened? It did. But it's certainly not enough, with copper 50% of the usage in the world going to China, to tell me why it should hold up in price right here. Those are the parts that are missing. Dollar down a bit, other currencies up a little bit. I don't think you can do anything in talking about the pound, because that's a Brexit event, and we'll see where you go. When I look at the gold market, the nice part is that the market has been staying over the 18-week moving average of closes in red, which gives the market an upside bias. I look at the most recent break low at 12.20, and we're over that by about $10. Bullish, and we've got a pattern of higher lows, higher highs. When I look at the chart action right here, the market's doing again what it did before. Could this be a shoulder, a head, and another shoulder for me? I don't know. It's called an inverted head and shoulder. It's possible. What I wouldn't want to see taken out is this break low here into the 12.16 area. The market's picking itself back up into the resistance area that we've got from here. When we take a look at swing lines I think clear a chart up a lot. You get a pattern that's higher lows, higher highs. That means the trend is up unless the market takes out 12.21. I then filter that by putting on the 18 and the 100-day average of closes, and the battleground, you could see where it shaped up right at these two numbers in reality, back and forth, and now you have a breakout to the upside. So I have a market that's in an uptrend, is defined by higher lows, higher highs. The bias is up since I'm over the 18-day average. Next thing I'm going to look at are where are the Bollinger Bands. And the Bollinger Band comes in at 1242.10. The significance of that is that markets will trade within Bollinger Bands 95% of the time. Where they break out of them is often when you get sideways action with the bands tighter than this. I'm not saying it can't move on that, but it's generally tighter. They'll look more like this as they try to break out one way or the other. And you're not quite there. That doesn't mean it can't go. So if it goes up, the most I'm looking for before you run into sort of a brick wall is 1242.10. The support for the market's back into that 18 to 100-day average of closes. And when I look at momentum as measured by the slow stochastic indicator, I have an overbought market. When I come to GLD, the popular ETF, the upper Bollinger Band number's 116.78. Today we hit 116.77, so bingo, you're right at the zone of the resistance. Overbought, higher lows, higher highs. So I'll say you've hit your upper target area. On pullbacks, I still look for support. The problem is overbought markets typically don't get the buyers coming out in droves for them. That is the problem. So you either have to embed, which you're nowhere near doing by getting the red and the blue going sideways over 80, or prices have to consolidate, dropping back the overbought condition. When I come to the GDX, the miners, I want you to look at the green line here that's dashed. That's the 100-day moving average of closes. It's recently been acting as a resistance zone. It was doing so back here. It's doing so again. The nice thing about the chart is it's going sideways and the Bollinger Bands have tightened up and momentum's pretty flat here. Is there a trend to trade? Frankly, if you look at it the way that I do, you have a pattern of lower highs, but you have higher lows. So you're narrowing in like that into the market. And I can say that, no, I don't have anything that I see there that's tradable. When I'm looking at the gold-silver ratio, I'm noticing that silver is starting to gain on gold. The lower this number goes, then silver starts gaining on the gold market. It's fewer ounces of silver to buy an ounce of gold. When I look at where silver's at on the chart, I see sideways action. I see a pattern of a lower low through Friday and then a big jump in prices today to the higher high. No trend. I don't consider a higher high and lower low a trend. I do see momentum is pointing up and the bias is up because the market's over the 18-day average of closes. Resistance comes in two forms here. The upper Bollinger Band at 1470.5, the 100-day average at 1483 with support back at 1437.5. In the copper market, let's take today's action off. This is what you look like on Friday. The market has a pattern on Friday of a lower low and a higher high. I realize this arrow is pointing up, but that's because of today. If you take out the highs of Friday, you're going to end up with higher lows and you already got the higher high. That would put into play the possibility that the resistance from the upper Bollinger Band, which at that time was 283.90, let's call it, is at work. Momentum fairly flat, but bias up because you're over the 18-day average of closes. The market jumps today on the news of the truce, gets itself up because the Bollinger Band even jumps with it. Remember, it looks at range 284.25 roughly. You get up and over that, you come down, and you're barely higher on the day. So the pros had their opportunity, and they went through that doorway like that. Momentum has not turned up. The trend is up. Supports back here at the combination of the 100-day average at 276.75 and 276, let's call it 60, the 18-day average of closes. Got it? In the platinum, you're still in a bear market. You've got lower highs, lower lows. You bounce to the right-hand side of the Bollinger Band. Resistance is up at the 100-day average. If you were to take out this number right through here, that high of 836.30, then you'd break the pattern. But until then, I think the bears are waiting, and then I start looking here. I noticed that both numbers are under 20 today. Both numbers were under 20 on Friday, not the day before. This market's got its hands full for tomorrow. If it's not going to embed means you switch over from oversold to locking in a downtrend, it's got to get up and run tomorrow. We'll see if that happens. In the palladium, this has been the strongest of the metal markets. I don't think I've broken stride in saying that. Again, the market goes up to a new all-time high, overbought in an uptrend, riding the Bollinger Band, and riding means it gets up, hits it, comes back under, keeps hitting it. That's a sign of strength. So this market is still very much in its bullish trend. And in the dollar index, you now have a pattern. If you stay like this, I can argue they got lower highs and higher lows. So think of it like this, narrowing in to figure out what to do. And you know what I'm going to say. The number of the battleground is should be the 18-day average at 96.74. You fell back to it today. You fell back to it on Friday, Thursday, Tuesday. It's looking for direction. If it's going to continue to the upside, it's got to get back over 97.24. Then the upside target's 97.52. If this market gets under 96.54.5, you will end up with lower highs, lower lows, and if you close under 74, you put into play the possibility of getting all the way back to the lower Bollinger Band. For the time being, I consider it a battleground right where you're at. I discuss this and many other things that we make available through our futures trading kit. Now, we built a new kit for you, and what the kit does is it walks you from point A to B. When you go to sign up for it, you'll also see an area on our website where you can sign up for my newsletter, the Linn research, all the different products we have. But we have put everything into this futures trading kit for you. How do you get it? Call my staff. They'll send you the link to it. And that's all it is. It's a link, and it's going to open up right on your computer. You can go to our website, sign up for it if you like to hide and don't want to talk to anybody here. I get that. Or click up here if you'd like to get right to our homepage if you're watching me on YouTube. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.